I want to introduce now our keynote speaker this morning. Rocky Goodnow is Vice President of the North American Timber Service at Forest Economic Advisors, LLC. In this role, Rocky is responsible for FEA's outlook on the North American timber markets. Rocky leads the development of FEA's timber econometric models, which are used in the analysis of future demand on wood fiber resources, regional timber supplies, and timber values. Rocky is the primary author of FEA's Timber Quarterly Forecasting Service publications and is a contributor to other FEA publications and studies. Originally from southwestern Virginia, Rocky now lives in Acton, Massachusetts. Rocky holds a master's degree in forest economics and management and a BS in forestry from both from Virginia Polytechnical Institute and State University. Please join me in welcoming Rocky Goodnow.
Thank you. Thanks for the introduction. Thanks for the opportunity for me to speak here this morning. When I hear my introduction, I think it could best be summed up as I'm just a nerd that looks at wood markets quite a bit. I come from a forestry background, but spend a lot of time looking at the economic side of it, and that's what I'd like to share with you today. Just a warning before we get started. I've got a lot of slides, and because sometimes I'm introduced as an economist, that means there are going to be a lot of charts and graphs. So I apologize for that. I'm going to go through some of them fairly quickly. Other ones I can take a little more time on. Good news, I do have a picture, so that'll break it up a little bit. But just to get started, I think what I'd like to do is just really take a look back at what have been the major shifts in global forest product markets. And to really take a look at that, I'm going to use, in just a little background, I spend most of my time looking at softwood log and lumber markets. That's what I study the most, and so a lot of my examples are going to be based on those markets, but a lot of the trends apply to other product markets. And this is taking a look, this is using data from the FAO, which isn't perfect, but it does serve a good purpose. And this is taking a look at apparent consumption of softwood lumber across North America, Europe, Asia, and South America. And there's really two big megatrends that we've seen occur in these markets over the past 7 to 10 years. The first one is that in Asia, we have seen, since 2010 to from 2005 to 2017, we have seen apparent consumption almost double. And when we look at consumption in Asia of softwood lumber, it's now on par with what is currently being consumed in North America and Europe. The other megatrend, which I know everyone here is familiar with, is what's happened with North American consumption. We saw a dramatic dip in 2010 related to the collapse in the U.S. residential markets, the global financial crisis. We have seen some recovery, but we're still well below the previous levels. So everyone here is very familiar with what's happened in U.S. housing starts, but just to put a little deeper context, I think it's important to know that this wasn't a recession in U.S. housing. This was a depression. This is taking a look at deep historical housing starts in the United States, and we have adjusted and put them on a per population basis. And so when we look at it based on the population of the United States, we can see at the depths that we dropped to in 2009, we were at the levels last seen during the Great Depression. And we have improved, but we're still at historically weak levels. Based on population, we're not even back to where previous recessions were. And so that kind of puts a context of what has occurred in North America at this time, during this period. Well, what's driven that increase in consumption in Asia? And when you look at this on a country-by-country basis, it's pretty easy to see what the answer is there. It's China. This is taking a look at that same concept, apparent consumption of softwood lumber split out by the major Asian countries, and we can see that that strong growth has been driven by China. It accounts for over 90% of that change in apparent consumption since 2005. This has, in large result, been a result of the mass urbanization of China and the explosive growth in their construction and overall economy that has occurred over this period. This is taking a look at the China's urban population. You can see since 2000 that strong trend with over 800 million now living in urban centers. It's accounting for almost 60% of their population. That is what has driven this growth in consumption, especially when one considers that most of their construction is concrete and cement based, but there is a considerable amount of wood used both during the construction period for concrete forming and afterwards for interior use. And so that is why we have seen this huge increase in demand for wood products in China. This is a great visual representation of that. This is taken two pictures. So there's two pictures, one slide though. Looking at the same perspective at the Pudong district of Shanghai in 1990 and 20 years later in 2010. Just fantastic growth over that period. So that is what has driven this increase in demand. So where has the U.S., looking broadly at first, fallen out on this? Well, from a softwood log perspective, we have seen an increase in softwood log exports to China. The U.S. is the third leading supplier of logs to China as of 2017, just behind Russia and New Zealand. And we've also seen some growth, not as strong as on the log side, on softwood lumber. The U.S. is, I think, the sixth leading supplying region for softwood lumber. In China, accounts for roughly around 3% of their imports. When we look at more specifically what that has meant for the U.S. South, we can see we've seen some growth. Now, initially, when we saw those export markets grow, it was really focused in log markets on the U.S. West Coast. There was a history and infrastructure for delivering logs across the Pacific Rim based on the trade with Japan. And so we first saw the strong growth in that market, but more recently, we've seen a dramatic increase in softwood log exports out of the U.S. South. This is looking through the first half through June of this year, the volumes, and we can see even just through the first half of 2018, we've already eclipsed the volumes that we hit in 2017. We've also seen a sharp increase in lumber exports, softwood lumber exports from the South to China. This is taking a look at those, and we can see that, again, very strong growth. I think when you think of some of the dynamics there, you have a lot more capacity in the South controlled by larger Canadian lumber producers who have sales offices in Asia, who have developed relationships. So that is part of the growth there. I think that we could expect even stronger growth in the softwood lumber markets if they weren't doing so well in the domestic markets. But the point is, we did see strong growth impacting the U.S. southern markets through the first half of this year. Now I'm going to kind of change it up a little bit and give more of an update on current events and really looking at the middle of 2018 as a big turning point. As everyone is aware, I'm sure, the U.S. and China are currently involved in a escalating trade dispute, and that is having significant implications for the trade of forest products out of the U.S. South. Beginning in May, China, as announced, it was related to phytosanitary concerns, but they started more strict inspection of log shipments along with some other agricultural goods. They were also enforcing greater documentation. This really had an impact on shipments coming out of Virginia and South Carolina, but that was the first blow to that trade flow from the South. There were a series of tariffs enacted, first by the U.S. on Chinese imports, and then China retaliated with tariffs on U.S. imports. The most notable occurred on August 23rd, the most notable from a U.S. South perspective, when a 25% tariff was placed on southern yellow pine log imports in China from the U.S. And last month, there was a similar tariff, 10%, placed on a number of forest products, including southern yellow pine. And that percentage could go up if this trade dispute continues to escalate. Since these tariffs were put in place, trade volumes have dropped rapidly. When we look at the second half of 2018, we're not expecting volumes to be anywhere near the levels of the first half. This is also impacting hardwood trade. I apologize, I have my numbers here for the U.S. total. It's a little more difficult to split out the regional, but it's safe to say that a significant portion of both the hardwood logs and lumber are coming from the U.S. South, especially the inland regions. This is taking a look at the growth first in hardwood exports, specifically looking at the log trade here, and how that was driven by demand in China. It accounted for about 80% in 2017. And when we consider the current tariffs in place, we can see that about 2/3 of the hardwood logs, and these percentages and shares are based on 2017 product shares, but we can see that 2/3 is subject to a 10% tariff that is expected to increase to a 20% tariff in 2019 if the U.S. goes through with their raising of tariffs on Chinese imports. And the other third is currently being taxed at a 10% rate with expectations of an increase to 25% in 2019. Similar on the hardwood lumber side, we're seeing that over half of the volume of hardwood lumber, which destined for China, which accounts for about 60% of total hardwood lumber exports, is currently subject to a 10% tariff and will face a 25% tariff at the beginning of 2019. So this is throwing a big bucket of cold water on that trade flow. In the near term, because of the tariffs, because of the disruption to the markets, both sides have pulled back. Again, volumes have dropped rapidly. We think that once it's clear exactly how the various products will be taxed and it's understood of what the actual cost of the tariffs are, that you will see some volumes return back to that market. As an example of this, this is taking a look at the cost of landed logs across some different supplying regions. Softwood logs landed in China. We're looking at this. This is the profile of that market in April of 2018, so right before when we saw strong volumes coming from the U.S. South, right before we really started to see the impacts of the trade dispute interrupt the market. And you can see that landed in China, southern yellow pine logs were very competitive versus the other major supplying regions. Now, when we flash forward to what that means with the tariff, this is taking a look at the same products priced in September. This is directly from an analyst that we have working for us in Beijing. And this is including not only the tariff, but the VAT tax that is applied to the logs, which is applied after the tariff, so there's a multiplier effect there. And we can see that what has occurred is delivered southern yellow pine logs, because the exporters have had to take a reduction in their price received, have remained competitive with the other supplying regions, but at a significant cost, over a 20% drop in the value received by the exporters. So there's still opportunities, but they're far less attractive than they were before the tariffs were put into place. So that's kind of an update on where we're at, and speculating on what's going to happen with the trade dispute is dangerous at best. So I want to move on a little past that and look at some other headwinds that exporters from the U.S. South are facing, especially when you're looking at delivering products to the Chinese market. And I just want to take a step back and think back to that picture we saw earlier of the development in Shanghai, this massive increase in demand in construction, and just put it in context that is kind of astonishing to me. This is based on some work that was done by Václav Smil. He's a Czech economist who is working in Canada, and he compared the amount of cement used in China during a 3-year period, 2011 to 2013, with the entire volume of cement used by the United States in the 20th century. And it was much higher, 6.6 gigatons of cement poured versus 4.5. That is I think the best example of the scale of the expansion that has happened. And so after you kind of soak that in and think about how massive that was, the first question becomes, well, how long can they keep that up? And I think that is the point that we are at now. When we look at overall economic growth in China, we can see that there's a strong slowing trend. Given the size of their economy and coming from an emerging market to that growth, we would expect this slowing. But when we look at the next 10 years expected growth, we're looking on scale of 6%, a little less, versus the almost 9% growth that China experienced over the past 10 years. So we are looking for a significant slowdown in China's growth. When we look at the impact that that's currently having on commodity markets in China, we can see that after a little bit of a stumble in 2015, we have seen a resumption of activity. This is taking a look at steel production. It's rising again. It's a good sign in terms of growth. But when we look at the impacts on commodity markets, it hasn't been as strong. This is taking a look at iron ore prices in China, and we're down 64% from where they were in 2011. So the commodity markets aren't what they were in China. Similar, let's take a look at copper prices. They're down 14% since the beginning of 2018. This is a very good indicator because of the use in industrial applications in China. It's a good bellwether for what's happening there. And so China's growth is slowing. And we think that there is a possibility of an even stronger contraction in the Chinese economy. It's a risk. When we look at modeling China's growth and when we do our base case assumptions, we look at this managed, slow decline in growth, but we are always quick to point out that we could see a more dramatic downturn based on the heavy debt levels that are currently facing the economy in China. This is taking a look at the debt of the private non-financial sector relative to GDP in China and comparing it to the same concepts in the United States and Japan, and just taking a look at the scale. First taking a look at the United States in the 2008 and 9 period. Everyone knows the impact that had on our economy. And since the GFC, China has blown past that quickly. And they are now at the level that Japan was at before they entered their long period of stagnation. And so the opportunity or the risk of a more dramatic downturn in China's growth certainly exists based on this debt load. An additional headwind that exporters from the U.S. South are facing when looking at the Chinese market in general, but international markets overall, is the headwinds put in place by what's happened with the U.S. dollar versus the currencies of other supplying regions in recent years. This has taken a look at the change of a number of producing regions, their domestic currency versus the U.S. dollar since 2014. And overall, you can see that most of the competing regions for the U.S. have dropped by at least 10%, with some really noticeable outliers here, especially when you take a look at what's happened with the Russian ruble. Most of that decline has been based on sanctions, but that's having a dramatic impact on the competitiveness of these other supply regions versus the U.S. South. With a weaker currency, they are able to sell at a lower price in China's markets and receive a higher domestic value for their products. And that's especially had a pretty significant role in expanding the utilization of Russian wood in China. This is taking a look at the combined volume of Russian softwood logs in the blue component and Russian softwood lumber in the yellow. Beginning in 2008, Russia enacted a log tariff in an attempt on their softwood logs in an attempt to foster greater investment on the Russian side of the border in converting capacity. It was successful. It helped. But what really sparked a greater output on the lumber side from Russia has been the weaker ruble. Because of that devaluation of the ruble that has allowed producers in Russia to become very profitable in ruble terms and expand their output. When we were looking at these markets in the 2010-12 period, and we were speaking to contacts there, the general consensus was because of the infrastructure deterioration, because of the high cost of accessing the timber resource in Russia, and because of the need for greater investment in their converting capacity, that Russia was going to be flat. Well, on a roundwood basis, we've seen that in recent years it's been anything but that. We have seen this increase because of the improved profitability on the Russian side, both at Russian mills, which tend to be larger, more upscale, similar to sawmills in Western Europe, and at Chinese mills, which tend to be very basic, small capacity, but have proliferated on the Russian side of the border to saw the material to get around the log export tariff. So Russia is now it has the ability to ship more wood into China. And that is being facilitated by another factor that we think is going to continue to shape the Chinese markets in the years to come. This is taking a look at a map of China's proposed One Belt, One Road, or Belt Road initiative. This is a large infrastructure and socioeconomic project. It's also sometimes referred to as the New Silk Road. And this is China making sure that they have the supply chains necessary to procure the goods that they need for their economy to grow. And they are focusing on expansion through Asia and Western Europe. And one of the outcomes of this is the development of block trains, large trains carrying solid loads of good traveling from Europe into into central China, and oftentimes going through Russia, as this one is showing, through Siberia, where there is considerable resource and capacity. And so the producers in Russia are able to take advantage of this, ship their products into central China. This is especially important when you consider what has been going on with the wood products industry in China in recent years. Concerns over pollution has led the central government to enact stricter controls on emissions, especially in the coastal areas where previously most of the logs and lumber were coming in, arriving via ships in the ocean ports. And they are moving that capacity interior. They want it away from the larger cities on the coast. They're tired of the smog in Beijing. When you travel there and you speak to the people, they talk about how their kids cannot go and play. They're becoming a wealthier country. They have those concerns now, so they are enacting greater curbs on emissions, and it's very efficient. They say shut down, and they shut down. And so you're seeing more of the conversion of products, whether it's logs or lumber, moving to the interior. And because Russia and European producers are able to take advantage of this developing infrastructure, they are more competitive versus the ocean supplying regions that arrive via ocean. And so that is a significant headwind going forward. We expect to see greater share of China's market taken by Russian producers. And then this is a final slide on why we have rather modest expectations for China's growth going forward. This is taking a look at China's working age population, which is represented by the red line here. And we're looking at that from 1990 through 2018, and we're comparing it with Japan's working age population 20 years ago. All right, so we've just slid the blue, which represents Japan's working age population, back 20 years. And you can see they are shockingly similar. And so, we've seen a significant slowdown and stagnation in the Japanese economy. A lot of that is population-based because of their aging population. When we look at China, we see some of the same dynamics shaping up. And so that will also have a moderating impact on their growth longer term. And just to kind of broaden that and put this in, a bigger perspective, let's take a look at that same concept, working age population across major economies. And what we see is, as we saw with Japan starting in the late 90s, it's declining. China has reached a plateau and will decline. Europe has been on a decline since the mid-2000s. The lone region, major developed region with an increasing working age population is North America. And so we think that, when you're considering and looking at export opportunities longer term, when you think of how consumption is going to grow and increase, it's important to look at these underlying fundamentals, right? North America looks like a region that will have growth going forward. And so transitioning to that, let's look specifically at some of the considerations across selling into the domestic market versus the export. This is just taking a look at housing starts and just reiterating the point. And I'm looking at U.S. housing starts. That's a major driver. It's not the only driver of wood product consumption. We're increasingly looking at repair and remodeling because that has been a strong consumer of wood products domestically. We think that that's going to continue to increase when you consider the age of the U.S. housing stock, some of the dynamics that's currently going on with U.S. With home equity in U.S. markets. We think that we'll continue to see strong demand there. But just taking a look at housing starts as a bellwether, yeah, we've improved off the bottom, but we're still at the level that we would normally be at the bottom of a recession. So when we think about that in terms of what's happening with population, we think that there is going to be further recovery in U.S. residential construction, which will lead to strengthening consumption for forest products. One of the big drivers that we look at when we're putting together our housing forecast is what's happening with the population, and more importantly, what's happening with the population on an age cohort basis. When we look at the U.S. population currently, the most populous age is 27-year-olds, followed by 28-year-olds. I might have that backwards, but the most people, the greatest population classes are 27 and 28-year-olds in the United States. This is the baby boom echo, and we can see that relative to the baby boom, it is currently larger. Now, when we think about where that shifts us over the next 5 years, we can see that that hump in the population is in the 32 to 33 age range, in the early 30s. This is the period when you see household formation for those ages really increase. When we think of what leads to household formations, there's two events. that tend to be the biggest indicators. The first is getting married, but the really strong indication is having children. Living downtown in an apartment is very cool when you're in your 20s. When you have a kid, you want space, you want yard, and you want better schools. And that facilitates moving out into single-family housing. And we think that, although the recovery continues to be delayed, based on the population shifts that are in store for the United States, we will still see continued recovery in housing. This is especially evident when you look at, when you think of a concept of underlying demand for housing, right? How many houses do we have to build per year to house our growing population? There's a couple of ways you can calculate it, but roughly, depending on some assumptions you want to make, it's 1.55 million units per year is the underlying demand. It changes over time based on population age cohorts, but using that as an indicator for how many houses we need to build, we can see that, yes, during the housing boom of the mid-2000s, we overbuilt to the tune of a little over 2 million units, but because of the depths to which our housing starts have dropped, and because the the population is still growing, we've had a lot of coupling up in households. We have underbuilt relative to that underlying demand by about 4 million units. So we have drastically outpaced how much we overbuilt with how much we have underbuilt. Now, we're not going to flip a switch and get those 4 million units built. There are a lot of supply side issues that will continue to make the recovery in housing slow, but we think that it will continue to be positive. And so from a domestic demand standpoint, we are looking for continued steady growth. When we think about how that growth is going to be met, specifically on the softwood, lumber and log side, we see some real supply issues shaping up in North America. In the Western Canada and British Columbia, and to a lesser extent Alberta, the mountain pine beetle epidemic has devastated almost half of their lodgepole pine resource, and that is starting to impact the output. Despite the strong lumber markets that we've seen and expect over coming years, production increases in BC have been relatively flat. There have already been mill closures because of the lack of logs, and we expect that that will continue to limit output from that region. In Eastern Canada, relative to the harvest levels that were in effect in the early 2000s, we've seen between a 15 and 20% decline in AACs in two of the major producing provinces, most notably Quebec and to a lesser degree Ontario. And those producers in that region are also contending with weak markets for their residuals. Most of the pulp and paper capacity in Eastern Canada was focused on graphic paper and newsprint sector. We're all familiar with what's happened with consumption on that side. There's been mill closures and capacity consolidation, and so the markets for manufacturing residuals are much weaker, and so that's hurting their economics and competitiveness in the U.S. And then when we look at the U.S. West, there's some room for increases. It's mostly going to come at the expense of log exports. Because when we look at their overall sustainable harvest levels, the current demand on the resource is approaching that. We have seen log prices in the West Coast return and surpass their previous peaks on a nominal basis, and so the ability for those regions to ramp up their production is limited. Where we don't have that problem is the U.S. South. There is plenty of fiber, harvest-ready, well-managed fiber in the South to increase production. This is taking a look at the standing growing stock volume on a green ton basis for natural pine in the blue and plantation pine in the green. And we can see that over the 10 years from 2005 to 2014, natural pine increased by about 10%. Plantation pine, because of age class dynamics, because of greater productivity, increased by 34% over that period. There is the fiber here to increase production. And when we look at the impact that that supply increase has had on pricing, we can see that, especially on the saw timber and chip and saw markets, wood prices are very low on a nominal basis, back to where they were in the early 1990s. On an inflation-adjusted basis, they're some of the lowest recorded back to the early 80s, late 70s. And even with an expectation of strong demand, we've seen significant investment in the South in converting capacity. We are not looking for a strong, sharp increase in log prices. We are looking for wood cost from the South to remain very competitive over the forecast. And as an example of where we see the increases, this is taking a look of domestic softwood lumber production across the major North American regions. And yes, we see some increases in the U.S. West and inland, but we're looking at an increase on an annual average basis of nearly 1 billion board feet out of the U.S. South. So we are looking for strong demand from domestic markets. So I've made a case of why we think that you're going to see a stronger increase in domestic markets, but that still doesn't take away from the fact that in terms of expanding the market for your products, exports are an excellent opportunity to expand that. And when we kind of go back, and when I was thinking about this, you kind of go back to selling and expanding your markets, salesman 101, right? And just putting it simply, you can sell the same product to different people, or you can sell different products to the same people, right? That's kind of a simple way of looking at it. And so when we look at the opportunities for selling the same product to different people, the question becomes, where are the different people that are going to consume wood? And when we think of growing populations, when we think of consumption rates increasing, as an indicator, where's the population growing? Looking at some of the major regions, again, we're expecting a dramatic slowdown in China's population growth. That is in strong contrast to what the expectations are in North Africa and West Asia, which is essentially the Middle East. We have seen increased consumption of forest products in there. Typically, those have been met from European or Russian producers. But when we look further out, we do see some opportunities occurring in those growing economies. And then and again, just kind of putting this in a population basis and thinking of, where we see growth. This is taking a look at India's population expectations over the next 20 or so years versus China. And so, it's often asked, is India going to be the next China? And I think people have been asking that for quite a while, and it's always going to happen a couple of years down the road. I don't think it's going to be the next China. I don't see that scale of growth occurring in the same amount of time in India. but I do see opportunities. They have a growing population. It's going to continue to increase, and their consumption of forest products will move higher as a result of that. And currently, India is a shadow of the consumption and the market impact of China, but we are already exporting logs from the south to India, and when we look further down the road, that is somewhere where we think we could see more possibilities. And then kind of focusing on, okay, well, you can sell the same product to different people. Now let's look at selling different products to the same people. One of the success stories has been what's happened with wood pellets in the U.S. South. Since 2012, there's been about a 22% compounded annual growth in exports of wood pellets from the U.S. This is all based in the U.S. South. That's been driven by policy decisions in Western Europe. Most of the exports have been primarily to Great Britain. But when we look at going forward, when we look at more opportunities, we see similar markets developing in Asia, specifically Japan and South Korea, where there's been an established history of trade with those countries. And we think that could be a further opportunity for increasing forest product exports out of the U.S. South. So with that, I just got some closing remarks. I'm not going to read these to you, but just in general, when we look at the biggest driver of demand in global markets, that's been China. That is slowing. With the current trade dispute, that is really hurting U.S. southern producers' ability to access and be competitive at an attractive return in those markets. But even without that, we see declining opportunities in China because of slower growth and greater competition from other producing regions. Where we do see, at least in the near term, more stronger growth in demand for products is going to come from the domestic markets, and that's increasingly going to be met with southern fiber because simply other regions in North America do not have the fiber to meet that demand. But export is still a good market for expanding and diversifying your markets, but you're increasingly going to have to look outside at new markets and at new regions for those opportunities. With that, are we taking questions? I'm going to be around all day today, so if you have any questions, I'd be happy to discuss. Thanks for the opportunity. Thank you.